And now for a closer look at that market action, Muhammed Wagley from Sasfin Wealth joins me. Muhammad, happy Wednesday. How are you?
Then a very happy Wednesday to you as well. Very happy to be here.
Wonderful. Let's get right into it. Not the best day, I think, on markets. I'm seeing red screens coming out of Europe, but majority red screens coming out of the local bourse. What are we contending with this afternoon?
Well, I think we're following on very much from, what has been going on yesterday and the day before. I think, subsequent to what happened to Mr. Trump on the weekend, I think really the markets globally have really just been reacting to that. Subsequent to what had happened, he also announced that his running mate, the VP candidate, is going to be Mr. J.D. Vance, very sort of well-established, somewhat serious individual. And I think, the markets have been really reacting to that as well. At this point, it's looking very likely that we're going to see a Republican victory at the end of November. And, that's really what's been driving not just us, but really courses around the world, bourses rather around the world. Just another thing to mention there was, comments by Mr. Powell. Broadly speaking, it looks very much nailed on that we'll get those rate cuts in September. So good news on that front for the rand, perhaps not the best news for the actual shares on the day. And this is following on from yesterday, where we lost about a 1.3%. So not been a good start to the week for the JSE, for sure.
Also very interesting to see some commentators saying that Trump is seen as reflationary and a risk on the US. And I thought, well, he's a pro-business. Well, he's seen as somebody who's pro-business, pro the markets. But it does look like that might just lead to volatility. But we are in July. That election is happening in November. It could be a bit of an up and down until then, Mohammed.
Yeah, I don't think that's unfair to say, and often enough, a lot of sort of his remarks tend to be very inflammatory, and the market then tends to react to that. And I don't think it's unfair to say that we will see quite a bit of volatility. But if you actually look at sort of policy, it's pretty on the nose. And from that perspective, I think investors as a whole, are actually quite bullish on President Trump coming in. But, from now until then, I imagine we'll see quite a bit of movement and, to that extent, quite a bit of volatility till that does happen in November.
Then, of course, another interesting one is we're still seeing gold rallying. And I'm wondering if you know what that means, considering that we are having a better conversation about US interest rates there. It looks like investors are still keen on hiding some of their money in gold.
Yeah, it's a bit of an interesting one, I suppose the flight to safe haven, while at the same time we are seeing sort of, global or rather US sentiment being relatively positive, at least within the context of that small cap space. Generally speaking, they move in the same direction, but I think the broader sort of picture that's being painted is that of choppiness, So we are seeing a bit of risk on sentiment, but on the same token, we are seeing gold flying, reaching all-time highs. So I think that just paints a picture of a bit of uncertainty here.
Bring it back home, a rally in SA bonds, I think a very interesting one there, of course, giving room to the fiscus. But it also shows that even though the equity markets may get over the GNU story very quickly, we are seeing some of those gains retained with our bonds.
Yeah, absolutely. And, you mentioned it, but, the GNU also still stands to, potentially be a bit of a catalyst for the broader equity market as a whole later down the line. But, just coming back to the bonds, they are quite attractive. They've been relatively depressed given, the whole interest rate situation. We got good news from Powell. Well, at least the market took it as good news from Powell just in relation to interest rate cuts. And I think, within that context, we're very likely to follow on, after them. So I would say with reference to the South African market, not just the bonds, the equities are starting to look quite attractive as well. And, the hope is that perhaps we can get a bit of a catalyst sooner rather than later, and we'll see everything move.
We don't have much happening on the company news front, but BHP out today. They've hit their guidance. I think they've surpassed their guidance with iron ore output. Keen just to get your thoughts there. It's just a great operation, really.
Yeah, interesting. They painted a very good picture with these numbers. So it was basically the production numbers for the year ending 2024. You mentioned it, but iron ore, we got record production numbers on that front. And we got really good numbers on the copper front as well, the best in about 15 years or so. Needless to say, copper is really where they want to be. If you cast your mind back to a couple of months ago with the whole sort of proposed acquisition of Anglo American, really what they wanted was that copper exposure. So good to see that they're getting quite quite a bit of synergies within their copper mines, I think specifically in Western Australia. But what I also liked, and I assume the market did as well, was the guidance was also quite positive. I think next year they're looking to see even more copper production. I think iron ore will be there or thereabouts, but it's looking quite positive on the copper front. And yeah, very good to see for the company. I think the market's reacted quite well to this.
Well, I just want to get your thoughts on what we're seeing coming out of Europe here. We are seeing red screens all around. UK inflation seems to have held steady there. But when we speak on the European front, less, I think, volatility now that we've seen the French and the UK really move past their election season. But I'm just wondering here, the case for European equities, how is that faring at this time?
It's quite interesting. So I think starting the year, I suppose, leading into these elections, they were doing really well and looking quite attractive, it must be said. So we saw a bit of a, I suppose, come down relative subsequent to the elections that we saw. I think it was relatively unexpected that, the left did as well as they did, given, how much had been made of Mrs. Marine Le Pen's right-wing party and, how much, I guess, they had taken from Mr. Macron. I think going forward, though, we've seen things, start to normalize somewhat. It's going to be business as usual, at least that's the way that I'm computing it. I still think Europe is probably a bit more attractive than the UK, and, definitely pockets of excellence to be looking at there, at least within the luxury space, within the automotive space. There's a lot to like still, I would say.
What about, I want to get into stock picks in a bit, but first, I'd like us to reflect on counters that have found favor with your industry peers.
In light of a bit of SA Inc., let's call it optimism, I'm going for Momentum. Momentum on its balance sheet has got a lot of SA debt, and that's done quite well the last month. I think it can continue to do well, especially if bond yields stay well behaved globally. We've got a bit of a interest rate, let's call it declining cycle, and in a lot of economies, I think we can have a few interest rate cuts locally as well. So I think that bodes well for local interest rate sensitive stocks. Insurers are definitely one of those. They feel it definitely first on their balance sheet that will increase NAV. Momentum is already trading on NAV. Embedded value will probably come out in the next reporting period in the high 30s.
I'm also picking an SA Inc. stock. So we spoke about Bell and getting bought out after a long period of being very cheap. And finally, someone came along and could catalyze a buyout because they came with a solution that turned out to be a win-win. So I've been looking around, could there not be some more stocks in the SA market that have been very cheap for a very long time? And Caxton is one that gained my attention. It's trading at a significant discount to its net asset value. It's got a lot of valuable assets, whether in newspaper and print. There's still some free newspapers around, the community newspapers. It still has got some advertising in that's doing much better than typical newspapers that need to get sold. And some packaging businesses, some other media businesses. And if you put them all together, you get a value of the Caxton group.
The reason I like the Richemont story is because jewelry as a branded jewelry makes up 40%, of jewelry sales, only 40%. Whereas handbags and watches, you can imagine your branded watches make up 100% of the market. And with jewelry, it's becoming huge now, where you're starting to buy branded jewelry, and it's because Richemont only, they're the biggest players with the likes of Cartier, as you mentioned. I mean, they're huge. The second biggest is Tiffany, and it's half the size of Cartier. So it's exciting to watch this because it's a growing. It only makes branded jewelry only makes up 40% of the market, and it's really growing. It's quite an exciting space because it really is. There's potential. And it really is where people are headed.
All right, Muhammad, an interesting mix there. We've got Momentum, Caxton, and Richemont.
Perfect. So I The analyst that provided feedback there on Richemont sounds very familiar to me. I believe that's Mr. Nick Pittaway. So let me start with that one. I'd say that, from a long-term perspective of the two, this one is a little bit different. This one is actually a company that I love, operating in an industry that is relatively robust, that being luxury. Nick there is speaking to the numbers that they released yesterday. I think broadly speaking, we noted a bit of softness in China, but we're seeing that more or less across the board. Louis Vuitton has also been under a bit of pressure, and really all the players that had big exposure in the Chinese sector. Now, that being said, despite that bit of softness that we're seeing, long term, I'm very much still a buyer of luxury, and I'm very much still a buyer of Richemont. My clients generally have quite a bit of exposure here, so I'm not sure if I'd be topping up at current levels, but again, from a long-term perspective, I don't know if I could actually be more optimistic. This is one of my favorite companies on the JSE, and yeah, very much in agreement with Mr. Pittaway there. I think the other two were a little bit different in that respect. They were both SA Inc. plays, so I'll start with a reference to Caxton, which is a massive player in the print media industry. Look, I mentioned print media, and of course, like from that perspective, it's not necessarily going to be a long-term play. But I should note, they've also got good exposure within the advertising space, which is something I like. But your analyst there mentioned that SA Inc. is very much depressed. If you look at it from a valuation perspective, and there's something I agree with, this does look very, very attractive. But again, I would just note that in isolation, without sort of broader sentiment in their favor, without some sort of catalyst, let's say from the GNU, it's unlikely that they're going to rally, in isolation. But if we do see some catalyst, if we do see some positive sentiment, working in our favor on the JSE, this is one that could definitely run. And to that extent, momentum is another, that this could really favor. But again, it's SA Inc. So I think the analyst mentioned this as well. Will benefit from those falling rates later in the year. And again, they're currently very undervalued, but I would say with reference to momentum and Caxton, very much short-term plays, whereas Richemont, I would say, is very much a long-term play. Like that one a lot.
And with that said, which counter are you loving this afternoon?
Yeah, so I think I'll go across the Atlantic as I'm wont to do, and I'm going to go for Palo Alto Networks, the cybersecurity company. So really what I like about this company in particular is I would say that they're probably the most, I'd say, diversified player in this space. They've got exposure all the way from infrastructure, the infrastructure required to sort of build these systems, to the endpoint security system. So as a whole, they'll be a big beneficiary of the trend. We did see some pressure on the share earlier in the year. They've recovered quite nicely, and I think if you've not got any exposure in this sector, they're definitely worth looking at. I think, just given the advent of technologies like artificial intelligence and things like that, it computes that, cyber attacks will become a bit more sophisticated and really accelerate the trend that we're seeing, of companies spending quite a bit of money protecting themselves from cyber risks and things like that. So I think this is a good play in that sense.
Wonderful, Muhammad. It's been a pleasure hearing from you. Thank you so much for your time today. That was your midday markets update with Sasfin Wealth's Muhammed Wagley.